Every time a customer uses their debit card, there's a lot happening behind the scenes that affects how and when you get paid. I'm Charles Crillo, an onboarding specialist at Ally Payments, and welcome to our YouTube channel. In this video, we're breaking down the entire debit card transaction process so you can understand exactly how your money moves from their pocket to your bank. And understanding this process is key to reducing fees and accelerating payouts for your retail storefront. Let's look behind the scenes of every swipe. Now, as a business owner, you see the approved message and hand over the bag. But what actually happens in those 3 seconds? It all starts with the trigger. Whether your customer swipes, dips the chip, or taps their phone, your point of sale system captures the encrypted data. That data is then sent to your payment gateway, which acts as a digital courier. From there, the information travels through the card networks. Think of these as highways owned by companies like Visa or MasterCard. They reach the issuing bank, which is just a fancy term for your customer's bank. The bank does a split-second check to see if the funds are actually in the account. If the money is there, they send a digital thumbs up back through the highway to your terminal. It all happens in seconds, often before the receipt even prints. It's important to remember that approved doesn't mean the money is in your bank account yet. There are two distinct phases: authorization and settlement. The first step is authorization, which determines whether the transaction can move forward. At this point, the customer's bank is promising to pay you and placing a hold on their funds. But to actually get paid, you have to clear the transaction. This usually happens at the end of the day through a process called batching. When you close out your register, your POS sends all these authorized transactions to your processor at once. This moves the transaction from pending to settled. This is why you might see a sale on your POS report on Tuesday, but the actual cash doesn't land in your business checking account until Wednesday or Thursday. The journey from a promise to a deposit is what we call the clearing cycle. Now let's talk about everyone's favorite topic, fees. You've probably noticed that not all swipes cost you the same amount. Typically, a debit card transaction is much cheaper for you than a credit card transaction. Why? Because of risk. With a credit card, the bank is lending the customer money to buy from you. With a debit card, the money is already there. Because of federal regulations, the fees on regulated debit cards are often capped at a very low flat rate. Compare that to credit cards, where you might pay a high percentage of the sale plus a fee, especially on those premium rewards cards. Every time a customer chooses debit over a credit, you're likely keeping a little more of your hard-earned profit. If the term acquiring bank sounds confusing, here's a simple version. If you accept card payments, you already have one. The merchant acquiring bank is your bank in the relationship. They are the ones who provide you with the ability to accept cards, and most importantly, they're the ones who acquire the funds from the customer's bank and drop them into your account. They also act as your line of defense. They handle the security of the transaction and are the ones you talk to if there were ever a dispute or chargeback, while also ensuring transactions move smoothly through the networks and your funds are deposited on time. Have you ever noticed that sometimes a customer is asked for a PIN and other times they just sign or hit enter? This changes the path the money takes. PIN debit is an online transaction. It travels through specialized EFT networks like STAR or NYCE. It's incredibly secure because it requires that secret code. On the other hand, signature debit, which happens when a customer hits credit on a debit card, travels through major Visa or MasterCard networks. For you, the merchant, PIN debit is often the most cost-effective and secure way to get paid. It reduces the chance of fraud and often carries lower processing costs. If your term has a PIN pad, encouraging its use is a small move that can lead to big savings over a year. Finally, the question every retail owner asks: when do I get my money? For most of your debit transactions, you're looking at a 24 to 48 hour window because debit is a direct transfer of existing funds. It's usually faster than credit. Just be mindful of timing. If you batch out on a Friday night, the banks are often closed over the weekend, meaning those funds might not arrive until Monday or Tuesday. Some processors offer same-day or instant funding for a small fee. This can be a lifesaver for cash flow, but for most standard setups, just remember that the debit card transaction process is built for speed, but it still has to follow the rhythm of the banking work week. Navigating the world of payments can feel overwhelming, but mastering the debit card transaction process gives you the upper hand in managing your business expenses. By knowing how your funds move and why fees vary, you can make smarter decisions about your merchant service provider. If you found this video helpful, hit that like button and subscribe for more payment processing strategy tips. If you're interested in accepting payments at your business, please contact us at alliedpayments.com. That's alliedpayments.com, and see you in the next video.